So, of course, I mean, there could be trades on the PSU banking space, but what about the fundamentals? As we know, the cabinet has approved the 30,600 crore guarantee program, setting up of a bad bank in order to clear all the NPA mess. So this is pathing a way for a major cleanup of the bad loans in the banking system. But what happens to the stocks itself, and what is the future of these PSU banks? Kunal Shah, who is the analyst at ICICI Securities, who tracks this entire space, is joining us now with more. Kunal, hi, good morning. You know, the key risk is the actual recovery rate, right? Which could make valuing these stressed assets a bit tough. You tell us, how do you think this would progress? And what is your recommendation on PSU banks?
Yeah, morning, Sonia. So resolution will definitely be key when we look at it in terms of the government guarantee amount, which is there of 30,600, and what they are proposing to acquire of 2 lakh crore kind of stressed assets from PSU banks. This indicates 18% realizable value estimated by the government. Maybe in the first tranche, which is going to be uploaded, which is of 90 or 1,000 crores, it's 100% provided assets. And they have been legacy assets over the last 4-5 years. So the realizable rate could be relatively on the lower side. So to that extent, in the first tranche, we will see the lower impact, and second tranche, wherein another 1 lakh 10 or 1,000 crore of assets gets added. There we will see a relatively higher realizable value than the first tranche. But both put together, our estimate is in the first tranche more than 1% kind of NPL reduction. And assuming that it will be 18% realizable value, it can have a net worth impact of 1.5 to 2.5% across the PSU banks, and 6 to 8% on the operating profit. But that's considering 18% realizable value. If it's lower, then the impact can be on a relatively lower side.
Kunal, hi, good morning. So, then how to approach stocks? Because, in the past also we have had instances when, these stocks see trading pops or big trading rallies, but then in general they have been well destroyers, except for SBI. So, how would you approach SBI and rest of the PSU pack?
So, preference is definitely towards SBI. Undoubtedly, SBI has a relatively larger chunk which will get transferred to NARCL. Last call also they had highlighted it to be around about 20 or 1,000 crores which have been identified. And overall, last 3 quarters, in fact, SBI has surprised quite positively on the asset quality side, and the performance has been even better than the private banks. So to that extent, the preference within the PSU space is definitely SBI from our end.
Got that, Kunal, but you mentioned 6 to 8% sort of recovery in the first tranche itself, 6 to 8% on the operating profit front with the first tranche. So given that if someone is trying to even play this for a bit of a smart trade, considering that PSU banks is still where the value is in the market relatively, beyond SBI, further down the curve, would you look at anything?
So we don't have other names under the coverage, but just looking at the list in terms of NARC, when we look at it, in fact, the other names which are there, wherein the exposure towards the stressed assets is on the higher side, they would be PNB and Union. So they have also highlighted in their earnings call in terms of 7,800 and 7,900 crores of assets which have been identified. So if we assume realizable value on that, then they will also see maybe on the higher side, maybe the benefit reflecting on their operating profit.
Okay. Kunal, now let's talk about some other issues. Do you cover IndusInd Bank? What did you make of this big move? And now that, the telecom issue is perhaps getting sorted, is it good for more, you think?
So IndusInd, overall, when we look at it with this entire last quarter as well, in fact, we have been positive on IndusInd. And overall, when we look at it on the asset quality side, in fact, towards the end of the second half, we should see credit cost normalizing, and that could be a key trigger for overall ROA improvement. And in fact, we are expecting, say, more than 1.5% ROA. The only thing was maybe in terms of the telecom exposure, if they had to take the provisioning upfront, then there would have been some negative surprise, which is now away. So to that extent, I think the overall expectations which are there for IndusInd Bank in terms of the earnings, they would really pan out. And in fact, the ROA and ROE trajectory getting towards the second half of FY22 and FY23 is going to be relatively better. And with this entire planning cycle 5, the focus which is there in terms of growing the lending book in their domain of expertise, be it in terms of CV or even the MFI as well as the diamond financing, that will help maybe the overall growth momentum as well. So we are positive on that.
Okay, positive on IndusInd Bank. Thanks a lot for that, Kunal. Thanks for stopping by. Have a good weekend. By the way, brace yourselves for a big move on the index this morning. The Nifty is up almost 80 points. ITC is surprised.